Finance Minister Tito Mboweni painted a bleak picture of the country's finances when he tabled the medium-term budget policy statement in Parliament. I'm joined by Momentum Investments Head of Investment Research and Asset Allocation, Herman van Papendorp, who will unpack some of the announcements the Minister made. Hi, Herman.
Hi, Lamise. Yes, it was pretty bleak. I think what the overall picture painted was very much a picture of rapid fiscal deterioration, with all the budget numbers looking much worse than what we saw in the February budget. I mean, if you look at what the budget projections look like for the next couple of years, for this year and the next two, we've actually got a budget deficit that is likely to be 2% on average worse than what they expected in February. And also a budget that in absolute numbers, the deficit will be higher by, on average, every year by 99 billion rand. Secondly, this high deficit of 6% is likely to be with us for a number of years. We're not seeing that budget deficit is coming down below 6% over the medium-term expenditure framework. And then our fiscal debt ratios have also deteriorated quite significantly, which is quite a surprise because we've looked at maybe that stabilizing in the outer years. But from last year's 57% debt ratio to GDP, we're likely to see that rising over the next 3-4 years to 71% of GDP, and then over the next 8 years to up to 81% of GDP.
And what would you say are some of the reasons for this fiscal deterioration?
Well, the reasons are twofold. I mean, firstly, on the revenue side, we're getting less revenue than what we expected in February of this year. The revenue probably will be 77 billion rand less than what we thought in February for every year over the next number of years. And on the expenditure side, we are spending more than what we projected in February of this year, probably by an average 22 billion rand every year the next couple of years. Now, on the revenue side, the reason why we're not getting the revenue we thought we would is the fact that firstly, the Stats SA has downgraded the size of the South African economy by about 300 billion rand since the February budget. Also, the economy has been growing slower. And then also SARS has not really done anything meaningful on the collection side. So that's all the negatives as far as the revenue is concerned. Expenditure is really an Eskom story. Eskom, the bailout of Eskom over the next number of years of 161 billion rand is really putting a lot of pressure on spending.
So is there any hope? What can government do to turn around this dire fiscal situation?
Well, unfortunately, government will have to do something on both sides of the equation. Firstly, cutting expenditure, also raising taxes. The problem with the raising of taxes is that we're probably close to the inflection point as a country on the Laffer curve, which means really that we're not going to generate the same kind of taxes that we would have previously by increasing the tax rates. Unfortunately, on the expenditure side, the big gorilla in the room is the public sector wage bill. And their government has to have the political will to really enforce a cutting of that specific wage bill. And, we will have to see whether that's politically viable.
You mentioned the revenue shortfalls. Are these shortfalls becoming a permanent feature in our fiscal landscape?
Lamise, it does look like it has. Over the last 5 years, we've seen an exponential rise in those tax shortfalls as SARS and the economy imploded at the time. And over the medium-term expenditure framework over the next number of years, this trend looks like continuing. We're budgeting for 53 billion rand of tax shortfall this year, and that rises then to 84 billion shortfall next year, and the year after is then 115 billion rand of tax shortfall.